Trade is so many of the economic models and so many of the business patterns are repeated from economy to economy. I mean, you have palm oil, you have a lot of the same type of exports that drive these economies. You wonder if it's really too homogeneous a region to really mean a lot in terms of FTAs.
It could, but it also could mean actually more corporate M&A activity and integration. I think that would be all very positive. That's why I think in order to play ASEAN from an investment portfolio and portfolio construction point of view, I think the regional banks would be a great play to get exposure to the ASEAN integration. I think the ASEAN countries are also learning the mistakes from Europe, or basically the good things what Europe has done as well, to sort of make sure that the ASEAN integration is potentially avoiding some of the European pitfalls. But I think the best way to play this would be through, for example, Malaysian regional banks, which are also very cheap from a multi-year perspective, but also with regards to currency. The Malaysian ringgit now trading closer to the Asian crisis levels. I think this sort of Asian ASEAN regional bank play potentially could be quite interesting in 2016.
Where do you think Malaysia is going, by the way? But Michael, that's a special case, I guess, what's going on in Malaysia with the politics and the 1MDB story, which keeps hitting, it keeps itself in the headlines for all the wrong reasons. So people might be recoiling and getting an overdose of bad PR regarding Malaysia. You kind of wonder if it's being unfairly tainted in an overall sense.
I would argue some of the issues are real, and hence political risk is something to worry about, but I suppose they will muddle through. And I think the risk-reward ratio for Malaysian assets is actually quite positive, because as you pointed out, the market is so negative on the ringgit, both against the dollar, but also in particular against the Singapore dollar. The Malaysian ringgit trading close to all-time record lows, and the interest rate differential. I mean, some Malaysian banks now pay around 4% on ringgit. I think at this level, the risk-reward ratio for the ringgit is actually quite positive. And of course, a big swing factor would be oil prices. I expect oil prices to go lower first and then stabilize in the second half. And if that's the case, then I suppose later half of the year, long Malaysian assets in the currency, but also through regional banks to play the ASEAN story, potentially could be very good risk-adjusted trade.
Do you see any that money that maybe rode out China and the volatility last year actually migrating to Southeast Asia? Mike, I'm asking you in a somewhat tangential way, because there was a time when Singapore wanted to try to fashion itself as a financial center and a magnet for access into China, but then we learned through the years that it's just too far away, and Hong Kong by default won many of those battles. I'm not trying to take anything away from Singapore, but it's not next to China, and it basically the geography is one step away.
Correct, and I would argue that Singapore is very well positioned at the strategic intersection between ASEAN, India and China, and that, I suppose, provides the real value for Singapore. But I would argue that China still has its issues, and I think they have made strategic policy mistakes that potentially in 2016 could potentially lead to more market stress. So I think India and ASEAN, from a risk-adjusted point of view, potentially are safer and better investment destinations for 2016.
Michael, thank you so much for your time. Happy New Year, okay? We'll see you throughout 2016. Michael Preiss, Taurus Wealth Investors. Coming up, we're just...